Okay, so today what I wanted to do was just do a practice on chapter 3 together. So if you want to go ahead and log in to Cengage, and we're going to go into the chapter 3 practice on Cengage. So again, to get to the practice, you may have to click on the assignments tab and then click show all assignments, because the practices don't always show up on the available to take, even though they are available to take. That part I don't really know why.
I just tried to refresh your page and I got kicked out.
Oh no. But yeah, you should see a chapter 3 practice set not graded under your assignments link. I'll give you guys a second to get in there. And so chapter 3, I know you did the little adaptive learning quiz on it. It's really about FICA, Federal Insurance Contribution Act. So it's all really about FICA taxes. So there's 2 main types. You have Social Security and Medicare. So of course, as an employee, you probably noticed that already because it comes out of your paycheck every week. So we're going to talk about, this whole chapter is really about this FICA contributions. So the book went into more detail about, who actually pays FICA taxes and all of that. The biggest things that I want you all to know about FICA taxes are how to calculate the Social Security and Medicare withholdings. And then we're going to talk about tipped employees a little bit and how to handle that situation. But for the most part, we're just going to assume in this class that all the workers that we're dealing with do contribute to FICA, or they are eligible to pay those taxes, even though they probably don't want to be. FICA taxes are paid by the employee and the employer. So they take it out of our paycheck, and then they also have to pay towards it, okay? So that is where we get, and it talks about that in the chapter, sometimes the 12.4% total FICA contribution for Social Security. It's because they're adding up the employee and the employer's contribution, okay? Now in financial accounting, when we dealt with payroll taxes, we dealt with both sides. We're really looking mainly here, I think there's one where we calculate both the employee and employer contributions. But the good news is, once you calculate the employee's contributions, the employer is a match. There's only one little caveat to that. So the only other thing is self-employed. Again, we won't really get into self-employed, but just know if someone is self-employed, then they're responsible. They have to take out double, basically. They take out the employee and employer contribution out of their paycheck. So they're paying both or double the rate. So I guess that's one downside of self-employment. Because at least if you're employed at a corporation or a company, they're paying, their half of that tax. So, and most of the chapter has at the beginning, the little summary that talks about the minimums and everything, maximum taxes. So again, in here, we're always going to do the OASDI, which is old age and survivor disability insurance, also more commonly known as Social Security, and much easier to say, right? Whenever I see OASDI, I don't know why, but I always think about USDA for some reason. So weird. Anyway, enough of my weirdness. But that's Social Security tax. So when you see OASDI, that's the Social Security portion. It's always 6.2%, up to the first $118,500 of wages for the employee. That is a 2016 tax limit, so limits have changed. And after we go through this, I'll show you a link. I believe the new limit was $128,400 now that people are getting taxed on in 2018. but it's still 6.2%. That rate has not changed, just the wage limit. So when we say wage limit, they only pay 6.2% on the first $118,500 that they earn. Anything they earn beyond that is not taxed on Social Security, which fair, not fair, right? And that's how it's set up. And then for the HI, that's your Medicare tax, and that's 1.45%. There's no limit. They'll be taxed, employees will be taxed on their entire earnings, and there's no maximum, okay? Because the maximum tax for Social Security is 6.2% of $118,500, okay? However, on the high or the Medicare, if they make over $200,000, we charge them an additional 0.9% Medicare tax. So we'll keep that in mind as we go through on those high wage earners. I will never see the wage limit or the extra percentage. So none of it applies to me personally. But when we're calculating payroll, we do have to keep those in mind when we're calculating. And again, the percentages haven't changed in several years. They've been the same. But the wage limit for the Social Security does increase over time, kind of the cost of living and everything. So I believe, like I said, it's up to $128,400 now. But the book uses 2016. That's the limit we're going to use, just because otherwise we get them all incorrect. So this first one is really just calculating both Social Security and Medicare taxes on all of our employees. These are all pretty straightforward. They're just computations. Just make sure you round appropriately. We always round to 2 decimals. So it says the biweekly taxable wages for employees of right shop follow. Compute the FICA taxes for each employee and the employer's FICA taxes. Well, again, employee and employer will be the same. Okay, so on here, really truly, you can open up your calculator if you like. Where's my little calculator? You're just taking for each employee their biweekly taxable wages. We're going to assume that no one has hit the limits or the extra tax because they haven't given us that information. So really, we're just going to take their wages, multiply it by their rates to get their withholding. So this one's very easy. It's just calculating. So for Manny Castro, his biweekly taxable wages are $1,000. So we take that by 6.2%, should get $62, right, for our Social Security tax. If it's 0 decimals, you don't have to put the decimals in, which is nice. You don't have to do the extra typing. On the Medicare side, it's 1,000 times 0.0145 or 1.45%. Or $14.50. Okay, so we're just truly going to go down and calculate all of these. For Pat, $968 of wages times 6.2%. Rounded up, it should be $60.02. Okay. And for the high or the Medicare, we take 1.45%, and you should get $14.04. So we'll just continue on. I know it's a little tedious on some of this. Payroll calculating is sometimes just tedious. You can always, I always recommend if you want to, when you're doing your homework, open up an Excel spreadsheet, you know, if you're familiar with Excel, because then you can just type in those rates and kind of do some formulas. And it can make it go a lot quicker if you're comfortable with Excel. Otherwise, you just get to use your calculator and a lot of typing in numbers. These aren't too bad, but when we get to gross pay and deductions and everything, when you're calculating deductions and then you're doing all this different, I really recommend doing that. But that'll be more in chapter 3, so I'll kind of talk about that more. For Joseph, his taxable wages are $1,004. So So he has Social Security of $62.25. And I have these, so I'm just going to type them in so you can have them and kind of check your work as you go. So kind of to save some time here. For Joseph, his Medicare contribution should be $14.56. You can also use the check my work, of course. And then we move on to Connie. Her Social Security contribution should be $64.88. $64.88. And Medicare, $15.17. $15.17. Moving to Harry, his taxable wages are $1,200, so his Social Security is $74.40. $74.40. And Medicare is $17.40. $17.40. Then we have Catherine. His taxable wages are $1,044.80. So her Social Security contribution should be $64.78. $64.78. And Medicare would be $15.15. $15.15. And then our last employee is Joseph S., because there's two Josephs. And his Social Security would be $69.56. $69.56. And Medicare would be $16.27. $16.27. Well, then from there, again, these are just all making sure you get the rounding right. That's the only tricky part of these. They want us to add up our total taxable wages and then our total FICA contributions for both Social Security and Medicare. Has anyone added those up yet? Okay. You want to give me what are the total taxable wages?
$7385.2.
Perfect. So $7,385.20 are the total taxable wages. If I slow down, it helps me not put all the words together. In my it must have been financial accounting class last week. We were talking about depreciation and depletion, if you remember those. So I said depreciation. I was like, wait, that's not right. That's two words put together. Yeah, gotta make sure, keep them on their toes, right? Oh. And then total Social Security taxes, we just add all of those up. So what are our total OASDI?
$457.89.
Perfect, $457.89. And then on the high side, or the Medicare, it's also hospital insurance is where the high comes from. What is our total there?
107.09.
Perfect, $107.09. So again, when you come down here and it's talking about the employer's totals, those are the same as the employee's totals. So under employers OASDI, it's just that same 73.8520 for both Social Security and Medicare taxes. I copied and pasted because why not, right? And then for the employer's OASDI tax, that is the $457.89. And for the high, it's the $107.09. You know, I'm just looking here on the sheet, and it shows the employer's OASDI as $457.88. I'm like, I don't know how they got a penny. They must have added up before they rounded. So just ignore that.
Well, if you multiply the 73.520.
Oh, that's where they're getting it.
Then it does go down 457.88. That's crazy.
That would be incorrect, in my opinion, because they should match.
Right.
So I feel like I need to flag that one. I'm like, that's just wrong.
Yeah, so it definitely the wrong answer, but
Yeah, they did. You're right. Thank you for pointing that out. But that would be incorrect. It's weird because, yeah, I'm looking at my solution sheet, and in one place it has it at the 0.88 and shows it right. But then below that, post-submission, it shows the 0.89. Okay, so I just need to send a content error on that one. Because, yeah, you would want to add up the total OASDI to be correct because they should be matching contributions. So that's a good lesson on the computer being wrong and us knowing what to do to handle it, right? Alrighty. Let's see. But other than that, I mean, if you hit check my work, it does turn that one incorrect, but it is correct. So you can either change it to 0.88 if you want the green arrow. I know some people are like, I must have the green arrow. Otherwise, you're completely fine leaving it correct yet marked incorrect. And then let's move on. Are there any questions on that one? That one's pretty easy, right? Yeah. Probably didn't even have to do it, but you know, I like to start at the basic level stuff. On the second one, this one is dealing with someone's paychecks at different points in the year. So this is where some of those limits come into play, and we have to consider it. So it says, during 2017, Rachel Parkins, president of Matheson Company, was paid a semi-monthly salary of $7,000. Must be nice. Compute the amount of FICA taxes that should be withheld from her paycheck. If an amount is 0, enter 0. Okay. Well, what we do there is we want to make sure every time that, you know, she hasn't hit that limit. So, you know, I always just kind of bring up my calculator. Woo. Looking out there. Okay. So I know she's on her 9th paycheck. That means she's already received 7,000 times 8 other paycheck. So her gross pay coming in before this paycheck was 56,000. So she's nowhere near the limit. Also, it's only her 9th paycheck. She's nowhere near the $118,500 limit. So we know, you know, this next paycheck of $7,000, we're going to tax at the full 6.2%. Okay. So I would literally just take 7,000 times 6.2%, and her Social Security tax for this period on the 9th paycheck would be $434. Well, at 56,000, she's nowhere near that extra Medicare tax yet either. So we would just take the 1.45% to get the high. So 7,000 times 1.45% is $101.50. So I will say, when you're reading through homework and the test or the test, make sure you are reading, you know, what paycheck we're on. And I always like to calculate the gross pay before the paycheck, and it'll make sense why we do that here when we hit the limit. So on Part B, we're now on the 17th paycheck. So again, I would take 7,000 times the 16th paycheck to know that her gross pay before the 17th paycheck, so gross pay to date, was $112,000. Okay, $112,000. Well, we know she hits the limit at $118,500, right? So if I take $118,500, the limit, and I subtract out her current gross pay, I get $6,500. That's all that she still owes the 6.2% on. Okay, so that's how I do it. You can do it backwards. I've done it backwards too, but I think this makes more sense. Hopefully for you guys. But however you get to it, I know that out of her 17th paycheck, or out of any of her remaining pay for the year, she's only going to owe Social Security taxes on $6,500 more dollars. So on that 17th paycheck, it's $7,000 of taxable wages. We're only going to calculate 6.2% of the 6,500 remaining until she meets that limit. Okay, does that make sense? So 6,500 times 6.2%, we should get what, $403? Well, you don't really need to recalculate the high or the Medicare. It's the same because she hasn't hit that extra 0.9%. So it would be the 101.50. Okay, 101.50. Well, we know on this last paycheck, she's now paid all of her Social Security taxes for the year. So on the next one, on C, when we reach her 24th paycheck, there's nothing left that she owes to Social Security. So really from the 18th paycheck for the rest of the year, she's going to have 0 withheld in Social Security. Okay. But then again, on the high side, you know, you can calculate it just to make sure, but 24 paychecks of $7,000 puts her at a gross salary of $168,000. So she's still under getting that additional Medicare tax. So her Medicare tax is still the 101.50. Okay. And then Part D just says, you know, her year-to-date earnings as of her 24th paycheck, we just calculated that, is $168,000. She gets a year-end bonus of $100,000. Well, when you read through the chapter, a bonus is taxable income. Okay, so if we get a bonus, it is considered a taxable income. If you've ever gotten any type of bonus, you know they take about 40% of it. So we do have to calculate FICA tax off of that bonus. It is considered taxable wages. So in this case, we know that anything beyond $200,000 is subject to that additional 0.9% high tax. Well, she's earned a total of $268,000, right? The 168 plus the 100,000 bonus. I want her job. So if we just subtract out the 200,000 from that, she's $68,000 over the 200,000. Okay, so $68,000 of her wages are subject to that 0.9% additional Medicare tax. So I would just take 68,000 times 0.009 or 0.9%. And she would have an additional Medicare tax of $612. I don't know what Rachel does, but she definitely earns a nice salary. Yes. Any questions on that one? Okay. All right, well, we'll move to the next one. Get that out of the way for a minute. And the next one is an example that includes when we have a tipped employer or employee. Okay, we talked about last chapter that, you know, tipped employees, we do have to count their tips as part of their taxable income. So whatever that employee reports to the employer in tips is added into their taxable income. So then when the government gets that, or when we do payroll, I guess we do payroll first, whenever the company does payroll, they're going to look at what the employer paid them in hourly wages plus the earned tips for their total taxable wages. And then they're going to calculate, you know, federal withholding, state withholding, FICA, all of that from that amount. So really, tipped employees aren't hard to handle. We just have to add what they've reported in tips plus their weekly earnings to get their total taxable income. And then the same rates apply. Okay. So it says Ernie Gilmore began working as a part-time waiter on June 1st of 2017 at Sport House Restaurant. Cash tips of $390 that he received during June were reported on Form 4070. which he submitted to his employer on July 3rd. During July, he was paid wages of $525 by the restaurant. Okay, so it wants us to calculate how much FICA taxes that the employer should withhold from his wages during July. Well, again, all you really have to calculate are his taxable wages. So you would take his $390 in tips plus his $525 in salary paid by the restaurant. So how much are his total taxable wages? If there's not a place for it, but how much are his taxable wages?
6.73.
Oh, that's a Social Security. You do have that calculated correctly. Yeah, $915. Yeah, just the taxable income. But you did calculate, that is the correct Social Security. But yeah, just his taxable wages are the $390 in tips plus the $525. So we should get $915 taxable income for Ernie. And so then you're absolutely correct. His Social Security tax withheld would be $56.73. So that's how much the employer is going to withhold and how much the employer is also going to pay in FICA taxes towards Social Security. And then on the high side, again, it's just $915 times 1.45%. So what is the Medicare tax withheld? Perfect. Yes, $13.27. Okay. So again, the only difference with the tipped employee is you have to calculate their taxable wage first. So tips plus whatever we've paid them or their employer has paid them. Any questions on that one? Alrighty. We have one long problem and then one short one, and we're done. Okay, so the next one, like I said, it's a little bit longer. Find my calculator up here. Okay. So this one says Empty Fields Company pays its salaried employees monthly on the last day of each month. Here's the annual salary payroll, and they want us to compute the following for the payroll for December 31st. So they pay monthly, and this is the last month of payroll for the year. So they want us to calculate their taxable wage and then their FICA contributions. Okay, so then we have to calculate both Social Security taxable wages and Medicare taxable wages because we know those amounts can be different, and then we're going to calculate their tax. Well, as you look through these salaries, you can see most of them are just going to pay the standard 6.2% and 1.45%. Because unless their annual salary is greater than $118,500, they're subject to the same tax. So we really only have the one Sam Ruiz that has an annual salary that's going to be greater than the limit. So again, these aren't that difficult, but here we're just looking at it in a different perspective. So we're looking at 1 month. They're giving us the annual salary, but we're just calculating taxable wages for 1 month. Okay. So for Jenna, what would be the OASDI taxable wages for Jenna? Yeah, that's exactly what you'll do. So that's all we have to do. We just take her annual salary and divide by 12. Very good. So her taxable wages would be $3,086.67. And again, since she's nowhere near any additional Medicare taxes either, that's going to be her high taxable wages as well. So that $3,086.67 are her taxable wages for both Social Security and Medicare. And then again, you're going to do the same thing you've been doing. Take 6.2% and then 1.45%. So you can go through and work these out if you want. I will type in the answers so you can check your, if you don't want to type them all in. And And then we'll do Sam together since he's an exception. But the rest of these are pretty straightforward. So Jenna, her OASDI tax should be $191.37, $191.37, and the high would be $44.76. $44.76. Make this a little bit bigger, maybe. Not really without losing stuff. For Norm, his taxable wages for both Social Security and Medicare should be $4,075. $4,075. 4075. So Social Security tax would be $252.65, and the high would be $59.09. For John, he has an annual salary of $40,000, so his taxable wages are $3,333.33. That's a fun one, isn't it? So $3,333.33, which makes his Social Security $206.67, and his Medicare $48.33. Well, when we get to Sam, we know he's a special case, right? Because his salary exceeds the limit that we tax on. So again, for me, I need my calculator. I'm always going to calculate his wages to this point. Well, his annual salary we know is $120,000. So that's basically $10,000 per year, or per month. So he makes a monthly salary of $10,000. Well, we've paid him to date for 11 months. So his gross pay up until this last pay period is $110,000. So if the limit is $118,500, again, he's then going to owe $8,500, or $8,500 of his pay will be subjected to taxes. Okay, so up to this point, his gross pay was $110,000, 11 months at $10,000. So we subtract that from the limit, and we get taxable wages for the OASDI, the Social Security, of $8,500. So his paycheck will be $10,000 gross pay, but $8,500 of that will be subject to Social Security taxes. So for his OASDI taxable wages, we would put $8,500. But on the Medicare side, the full $10,000 will be subjected to the 1.45%. So he's the only special one that makes over the limit. So again, his OASDI taxable wages are $8,500. So I would just take 6.2% of that. Should get $527. $527. And then his high taxable wages are $10,000. So 1.45% of that would be $145. Any questions on Sam? Okay, I'll go ahead and type in the rest of the answers, and if you want to check them and do your check my work, or you just want to type them in, however you want to do it. So Sue Compton does have taxable wages of $3,075. So her Social Security tax is $190.65, and her high is $44.59. I'll just type the rest in here. If you can't see one, just holler at me and I'll read it out. Once you've got all of those in there, then you're just totaling everything. And I see they're going to be off a penny on this one too. Like I can see that already. So the total taxable wages for Social Security should be $47,114.18. 47,114.18. The total OASDI tax should be $2,921.07. So 2921.07. Medicare taxable wages should be $48,614.18. So 48614.18. And then our total Medicare or high tax should be $704.91. And then again, they get employers OASDI as 1 cent higher. You can enter that or enter what we actually came with. So I'm going to put the 2921.07 and the high of 704.91. They got 2921.08 because they were taking total taxable wages times the 6.2. So we have a slight rounding difference there. So again, that one's just long, but pretty much the same thing we were doing earlier. This chapter really, as long as you understand the wage limit and the tipped employee, as long as you understand those things and the extra Medicare, that's really the bulk of the calculating stuff, you know, so just kind of looking through the other things. Any questions on that one? Alrighty, well, we'll move on to the last one. Plenty of time here. Okay. So this last one is just, I think it's important to kind of become familiar with some of these tax forms as a future accountant or current accountant. So some of these are forms that are required, and you may have seen them in tax accounting as well, but this one is dealing with an employer's quarterly federal tax return. So it's form 941. So these are very similar to the actual official forms that are required by the IRS. So this one, it's saying cruise company has gathered the information needed to complete Form 941 for their quarter ended September 30th. They want us to round our answers to the nearest cent. And we're going to use the information they provided us to complete the first part of this form. So again, they're required quarterly to submit, how much they've withheld in taxes and actually pay those taxes on a quarterly basis. The IRS, of course, wants their money right away, even though if you've ever had a hiccup getting back your return, they're not so quick on the return sometimes. Good old government, right? But anyway, it depends on how big our company is, how frequently we send in taxes. So this company is big enough that they send in quarterly taxes. So we're just going to kind of complete some of this. Obviously, they've already completed the company information and that. Just make sure over here on the right-hand side, I can't see the whole thing, but it says report for this quarter of 2017. Just select the July, August, September, because they told us this was for the quarter ended September 30th. Again, that first part is filled out. Then we go down to part 1. Let's see if I can go down. There we go. Okay. So we're going to use the information they provided us to fill this in. So part 1, it asks the number of employees who received wages, tips, or other compensation. Well, if we were to read up here in the stuff, it told us the number of employees for pay period that included September 12th, I'm assuming is what they mean, was 14 employees. Okay, so it had 14 employees. The second line just asks for wages, tips, and other compensation. Well, they told us in our second bullet point that our wages paid in the third quarter were $79,750.17. So 79750.17. And the federal income tax that was withheld in the third quarter was $9,570. $9,570. So we haven't learned how to calculate that yet. They're just giving us that information. In this case, we are going to go down into the 5A. If you read 4, it says if no wages, tips, and other compensation are subject to Social Security, we would go to line 6. But we have taxable wages. We know that. We have taxable wages. So we have to fill out this next section. So they're just having us calculate based on the total wages, tips, and compensation. So there in 5A, in column 1, you're going to put the total taxable Social Security wages. Well, they didn't tell us any differently. Well, actually, they just told us total taxable Social Security and Medicare wages are the same as the wages paid. So it's the $79,750.17. Okay. Well, in this case, they want us to multiply it by 0.124. That's for 6.2% of both the employee's contribution and the employer. So that's both contributions because we withheld from the employee and now we have to pay our share too. So that's where they're getting the 12.4%. Okay. So that should be what, $9,889.02. So $9,889.02. And then 5B, they didn't report any tips. So we can just leave that one blank. 5C is the same. The total taxable Medicare wages is the $79,750.17. And again, this time we're multiplying it by 2.9%, or 1.45 plus 1.45%, both the employee and the employer. So you should get $2,312.75. $2,312.75. And then 5D, again, there were no taxable wages and tips subject to additional Medicare tax withholding. So we had no additional Medicare tax withholding, so we can leave that one blank. So 5E tells us what to do. It says add column 2 from lines 5A, 5B, 5C, and 5D. Well, I just have the 2 there. So I would just add up those two, 5A and 5C, on column 2. And you should get $12,201.77. $12,201.77. 5F talks about tax due on unreported tips. We do not have any tips, so we don't have to worry about that. Line 6 says total taxes before adjustments, and they gave us that. Wait, where did they give us that? That's somewhere. Trying to find where it came from. Sorry.
From line 3 and line.
Yes. Thank you. We add. I think it says that, doesn't it, if I read the actual form? Thank you. Just had a moment. Yeah, it tells us add line 3, 5E, and 5F. I read the instructions on the form. So line 3 was the $9,570, so that's income tax. 5E was the $12,201.77, so all of our FICA tax. So on line 6, I just add those two together. So it should be $21,771.77. $21,771.77. Well, then I'm going to skip down to line 10 because it makes sense. They want, or actually line 11. Line 11 wants the total deposits for this quarter, which they actually gave us up in our information. So line 11, they give us how much we've already deposited or how much we withheld. And that was $21,771.83. Okay. So as you can see, those two numbers, the line 6 and the line 11, are off by 6 cents. Well, as you saw when we were going through these problems, sometimes that's just due to rounding, because when we add up total wages, you know, the rounding gets off just a little bit. So what we do then is we take line 11, the 21,771.83, so what we withheld, and we subtract what we calculated on this form, the 21,771.77. It's just 6 cents difference. And I'm going to put that, if you see on line 7, it says current quarter's adjustment for fractions of cents. I'm just going to put that difference right there, the 0.06 cents. Okay, so I just took line 11 minus line 6. So what we paid in minus what we just calculated on this form. It's a total of a 6 cents difference due to rounding. And then we don't have any adjustment for sick pay or tips and group term life insurance. So on line 10, we just want to add line 6 through 9, which is just adding line 6 and 7, which puts you at matching what we actually deposited. Okay. So kind of the point of this form is to match up what we deposited to what we should have submitted to them. And you may have some cents, you know, a little bit off due to rounding. Okay. I just wanted you to kind of see how that form was handled, because it is a very common form for an accountant to fill out. This isn't the whole form, but it's a good portion of it, most of it. I think the rest is just like signing it. So, any questions really on anything in chapter 3?
So, okay, so if it's off 6 cents, you have to pay that sometime or something?
No, we actually owe, honestly, we paid the 21,771.83. So we actually paid 6 cents more than what the calculations came to, just due to rounding up when we did when we calculated. So nothing really happens with that 6 cents. It's just showing okay, this is how much, if you're off with, you know, within just a few cents, then we know that we paid correctly, if that makes sense. If you're off 20 cents or 30 cents, it's usually just a rounding error. If you were off like $200, then if we had underpaid, we would have to pay that difference. And we have calculated incorrectly somewhere. But yeah, if it's just due to rounding, which most of those are, we just adjust it on here and it kind of evens out. That's a good question. Any other questions?
Is there a certain amount you should look at as far as when you're gonna pay it or put it as rounding? I mean, if it's $10, are you saying yes, you're paying every month to refund, or you put that as rounding?
I think it depends on how large. It's probably like based on a percentage of your total payroll, because this is a pretty small payroll, so 6 cents is nothing. Because with rounding, I mean, if you were paying $1 million payroll, $10 kind of becomes negligible at that point. So I think we would look at it as kind of, if it's more than like a percent difference or something, that's when it would be considered a consequential number. That's a good question. I'm sure there's actually like a hard and fast rule out there somewhere on that form. I could probably ask Professor Thornburg, since she teaches the tax. But I would imagine they would consider it significant over a certain percentage. Yeah. But yeah, that could vary again, yeah, based on the size of the payroll. Significant, maybe a few dollars if you have a small payroll. Any other questions? I feel pretty good about it. All righty. Let's see. That's what I have for tonight.